Karishma, put this into perspective as far as the repo rate cut. This has happened for the first time in years together, and it comes at a time when the mood seems to be upbeat vis-a-vis the GDP also, as announced by the governor, talking about the fact that we'll see, the GDP growth as at about 7% or so, at least in the second quarter this year.
Yeah. Well, I think this, as we all know, this marks the first rate cut in nearly 5 years, and this move is definitely expected to make borrowing more affordable, potentially boosting spending and investment across various sectors. I think it's a big fixer by the new RBI governor because he has taken this important step amidst the time where the geopolitical concerns and external factors are hitting quite high, but the fact that this move will help in increasing liquidity in the market and banks to get cheaper funds from RBI will also, in a way, help the stock markets and give support to struggling sectors. However, I do flag the concern and challenge of inflation because usually a repo rate cut usually leads to increased demand, and inflation is a big worry, which Mr. Malhotra, RBI governor, has also highlighted. A 6.7% growth for FY26, well in line with what government is also expecting, between 6.3 to 6.8, what IMF and World Bank have also predicted, which is around 6.5. So I think it shows good signs for the sectors and for countries' economies.
How is this going to play out in days to come as far as the lending rates are concerned? It's been a cut for the first time in 5 years. Talk to us about what the expectation of the government is as these announcements come in the backdrop of the presentation of the budget, also with the government emphasizing more on the fact that consumption has come down over the years and the aim is to boost consumption, isn't it? Particularly by the middle class.
Yeah, while RBI's MPC decision is independent of what the government thinks and how the budget is made, there is definitely a cross-section connect on the consumption factor. The fact that budget focused so much on consumption and trying and bringing growth, demand and supply back into the market, a repo rate cut in line also boosts economic growth. Lower interest rates makes loans more affordable, encouraging businesses to expand, invest in infrastructure and create jobs. So this will allow consumers to spend more on homes, cars, and you see other big ticket items which will increase the factor of consumption. But like I said, grass is just greener on one side, and not everything looks great because there are always global and domestic factors which can impact the growth ratio, and the fact that inflation is an underlying concern, and if demand rises too quickly, then it could lead to further inflation, prompting RBI to reverse the rate cut later. But however, a decision coming after 5 years is big, and with coming in with the new governor, that is Sanjay Malhotra, who moved from North Block, from the Government of India, Ministry of Finance to RBI, it somewhere does show a connect.
You did mention that he spoke about the fact that the global scenario is always difficult and challenging. He did speak about this, emphasizing that the global environment rather is uncertain and it has posed difficult trade-offs. What was he referring to when he said that?
Well, geopolitical issues, significantly impact the effectiveness of a RBI repo rate. Like if we see currently, while things are sorted in oil price volatility or conflicts in oil-producing regions can push crude oil prices higher. And since our country imports most of its oil, rising prices could lead to higher inflation, then which could kind of offset the benefits of cheaper loans, and in that way a cut in repo rate will not be beneficial. But currently oil prices are pretty stable, and with our arrangements in Russia, it's something not to be worried about. But we cannot really ignore the global economic slowdown, especially if Donald Trump and the United States of America takes a decision of putting tariffs on India, then that could definitely face downturns. The decision could face downturns due to these geopolitical tensions. In a way, India's exports may decline and then impacting overall economic growth. Let's not ignore that we also have a low investor sentiment currently with low FDI inflows. They've been cautious, causing instability due to the trade war. So all these geopolitical concerns can lead to supply chain disruptions, and then it could become a problem. In fact, Chief Economic Advisor in his economic survey also said that all said and done, with all green shoots looking for Indian economy, we need to be cautious of geopolitical factors, and especially with U.S. elections and the way decisions are turning by the government of U.S. towards, say, Mexico, Canada, or China. We should not be surprised if something comes our way.
All right. Karishma, I'm going to leave it at that for the moment. The repo rate has been cut, and that's a big headline today. This decision has been taken by the RBI. It has been cut by 25 BPS at 6.25%. It's actually the first rate cut in 5 years, as announced by the RBI just a few moments ago. RBI reducing the key lending rate by 25 basis points to 6.25%, and the first time since the year 2020, particularly the period after the pandemic. Listen in to what the governor has said.
The MPC unanimously decided to reduce the policy rate by 25 basis points from 6.5% to 6.25%. Consequently, the standing deposit facility, SDF, the SDF rate shall be at 6.0%, and the marginal standing facility rate, also called the MCF rate, and the bank rate shall be 6.5%. The MPC also decided unanimously again to continue with the neutral stance.